right back at it now. It's we're halfway through the week already. It's what happens when you have a short week, right? Good stuff. Joining me now, Jay Young, fourth generation oil and gas professional, founder and CEO of King Operating Corporation, an oil and gas company based in beautiful Dallas, Texas. And the Big D, he is. Welcome to the program, Jay.
Hey, Steve. Thanks for having me on again.
Oh, always good to have you here. So
yes, sir.
I didn't realize this, but apparently a drop in U.S. oil and gas jobs, even as energy in America continues to increase. What's going on here?
Well, we're just seeing an afterflow of all the drilling that's been going on in the United States. I mean, shale wells come on at such high rates, and companies are drilling longer laterals, so therefore, these wells are coming in pretty good. And when they do, everything's going great. And all of a sudden, when they quit drilling, because rig count's down, 40-50% in the last 2 years. So therefore, we're taking rigs off the market. So therefore, less wells are being drilled, which means that we'll see an aftermath of this in the next 3 to 6 months, where production will come down in Texas.
Production will come down by how much?
Yeah, I don't think a lot, but I do know that when shale wells, the SHALE, when those shale wells come down, they lose 40-50% the first year, in production. They may come in at 2,000-3,000 barrels a day. They're at 1,000 barrels a day within a year, and they come down considerably. And so when you quit drilling, obviously, we're going to see that come off the market. So, we could be down. And it's a cycle, just like everything else. And we've seen, I'm a fourth generation guy, so I've seen a lot of cycles in the industry. And when you have less wells being drilled, production will come down. And then when production comes down, supply and demand, economics 101 kicks in. And then you have wells that, make less oil. We have less on the market. So therefore prices will come up, and we'll see prices probably start to move over in the first quarter of 2026, second quarter. We'll see, prices start moving back again.
Right now, I'm seeing oil right around $64, $65. There was a peak there a few weeks back. It went up, crowded the high 70s. Looked like it was going to go on a bit of but then it came back. Now we're right back to where we were 6 months ago, aren't we?
Yeah, we are. And geopolitical risk. China's buying a lot of oil right now to put in storage. Russia unfortunately selling a lot of discounted oil around the world if they can, which Trump's not too happy about. And we're just safeguarding and trying to figure out exactly what's going on there. If Russia quits selling discounted oil, you'll see prices go up 20-30% in literally overnight. If we can get Russia to quit selling that discounted oil, or try to get India to quit buying it, I guess.
So let me follow this through then. What you're telling me then is, if, for example, the war in Ukraine ends and sanctions on Russia, economic sanctions from the EU and the United States and others end, and Russia goes back into the normal selling process, the price of oil and gas around the world is going to spike 30%. Yeah,
right. Because you'll see some people that aren't buying some discounted oil start buying some oil from other countries. And I mean, it's 100 million barrels a day is a lot to forecast. I mean, that's 100 million barrels a day. That's what, $7 billion every day that trades hands. So I don't think people realize what happens when, a barrel every day in the oil and gas markets, and how much money is shifted. But yeah,
well, what would that mean? Let me ask you that. Let me ask you the practical application of that, Jay. If oil goes from $65 a barrel oil to $80 a barrel oil, which is basically what you're saying, there'd be a jump, maybe a little higher, but we'll say 80. What would that mean for gasoline? What would that mean for natural gas, heating people's homes? What would the impact be on the American economy?
Yeah, same thing. And I'm more or less on, I don't know about the war in Ukraine as much as I'm concerned about when, Russia quit selling oil to India, more than, we have, if we have a truce around the world, you may see prices, stay right here or creep up a little bit, and the supply and demand will kick in. But if you have Russia quit selling oil and we can continue to sell oil like we have to India and OPEC can start selling that oil, then you'll see a $75, $80 a barrel crude. But if everybody's happy and I don't know if Putin can ever be happy unless they just take over the whole country of Ukraine, probably. Then that's going to be different. But what Trump's trying to do is he's trying to obviously make peace with Ukraine, but right now he's trying to get India to quit buying this illegal discounted oil from Russia.
I don't see that happening, considering Modi, Xi, and Putin all got together with and have had this deal. India seems to be cozying up to China and to Russia. They want the cheap oil because it might push gas prices higher in America and affect our economy. But if India is unable to continue to buy cheap oil from Russia, it'll really hurt the Indian economy, won't it?
Yeah. Well, and like I said, China's buying a lot of oil right now just to safeguard and put up, and because they don't know about what's going to happen in the future, and they're storing 100 million barrels of oil just to be safe and do what they can to keep their economy down and keep their prices. I mean, a barrel of oil to them obviously is a barrel of oil no matter where they get it, which is not that doesn't play into Trump's cards. Trump likes to play the cards and do different things.
Well, I guess we'll keep an eye on it, Jay. That's a little disconcerting. I suppose if you wanted to invest in oil, though, it's maybe not a bad time to do it. It's discounted right now, and if oil goes to $65 to $80 or $85 a barrel, then if you're invested in oil stocks, you might do pretty darn well. Jay Young, always appreciate you being here. Thank you.